If you drive anywhere in America, February 2026 could quietly turn into one of the most expensive months you've ever had behind the wheel. Not because gas goes up, not because your car payment changes, but because a new wave of driving rules is about to flip how the road is policed in a way most people still don't see coming. These rules weren't hammered out in primetime hearings. There were no big countdowns on the evening news. They moved quickly, mostly out of sight, and they were built to do one thing extremely well: capture violations at scale. Technology will be watching, automated systems will be calculating, and the dollar amounts involved are not small. Beginning in February 2026, 5 new rules will start taking money directly out of drivers' pockets, often without a single traffic stop. Hundreds of dollars, thousands of dollars, sometimes rolling penalties that keep adding up until you fix the problem. The real danger isn't just the rules themselves, it's how suddenly they're being turned on, how quietly they were finalized, and how unprepared most drivers are right now. By the time many people realize what shifted, the fines will already be active, the letters already mailed, and the damage already done. For months before any of this hit the public radar, there were warning signs visible to anyone who knew where to look. Transportation analysts started noticing strange activity in Washington: closed D-door meetings, federal agencies quietly coordinating with tech companies in ways they hadn't before, enforcement budgets getting steered toward long neglected departments. Even more telling, the usual resistance from automaker and insurance lobbyists went silent. And when transportation policy goes quiet in DC, it usually means the major decisions have already been made. My name is Sophia, and I've spent years tracking how regulatory changes like this play out for real people, not on paper, but when the bills show up. What made this moment stand out wasn't just that new driving laws were coming, it was how fast all the pieces moved into place at once. State DMVs started quietly updating their codes. Insurance companies rewrote their internal risk formulas. Law enforcement agencies began buying new monitoring hardware before most drivers had heard there was anything to prepare for. This wasn't gradual reform, it was staging, and preparation at that level only happens when enforcement is about to ramp up. The question was never if new driving rules would arrive. It was how aggressive they would be, how much money they would pull from drivers, and whether people would realize what was happening before February 2026 turned compliance from optional to mandatory in practice. By early summer, the schedule came into focus. February 2026 wasn't a random date. It was the point at which federal systems would be fully synced, state enforcement agencies would be operationally ready, and automated monitoring networks would be live across the country. This isn't a soft launch. It isn't a small pilot. Internally, federal transportation officials have referred to it as an activation phase. That language matters. Activation means enforcement starts immediately, not after months of grace periods. By February 2026, every state will be aligned on the same baseline rules, the same verification systems, and the same penalty frameworks. Once that switch flips, there is no built-in buffer for confusion or lack of awareness. Officials have already said that within weeks of the start date, active monitoring will be running in all 50 states, not just the occasional traffic stop. Continuous tech-driven oversight that doesn't miss, doesn't get tired, and doesn't offer much discretion. What makes this especially alarming is how few drivers know what's coming. Recent surveys show fewer than 25% of licensed drivers can correctly name even one of these new rules. That gap between how ready enforcement is and how little the public understands is exactly where serious financial harm happens. The systems don't pause while people catch up, they just begin issuing penalties. What also sets February 2026 apart from earlier changes is how the enforcement model itself has evolved. For decades, traffic law depended heavily on humans. An officer had to see the violation, decide it was worth acting on, and then make the stop. That naturally limited how many violations could be enforced. These new rules strip away most of that limitation. Enforcement no longer depends on how many officers are on the road or where they're positioned. It's woven into infrastructure, cameras, sensors, databases, real-time verification, all doing work that used to require judgment calls. That shift changes everything. An insurance lapse that might have slipped by for days now triggers a fine instantly. Slowing down only when you spot a camera doesn't work when your average speed is being calculated across miles. A glance at your phone that once depended on an officer's direct observation can now be detected by systems that never blink. That's why officials have described these changes as transformative. They're not just raising fines, they're redefining how compliance is measured. And when compliance is measured continuously, almost everyone who isn't prepared is going to trip something. The financial stakes are huge. Experts estimate that drivers who don't adjust could be hit with anywhere from $500 to over $10,000 in penalties in the first year alone, depending on how many systems they trigger. Those numbers aren't guesses. They're written into federal and state codes already on the books. This is the moment where driving in the US moves from casual compliance to constant accountability. The first people to feel that shift will be the ones who assumed nothing important had changed. The first rule targets something inside many cars that most drivers barely think about. Beginning in February 2026, compliance with event data recorder requirements becomes fully enforceable. If your vehicle was built after 2018, it's expected to have a working event data recorder and EDR in proper condition. This device is no longer treated as background tech. It's an inspection item. If it's faulty, unplugged, or obviously tampered with, the penalty is automatic. The base fine starts at $750 before any secondary effects are considered. What makes this rule so powerful is how it links enforcement and insurance. Event data recorders capture detailed information about what your car was doing just before an incident: speed, braking, throttle position. Starting February 2026, insurers get expanded access to this data when handling claims and investigations. That means your driving behavior stops being a matter of opinion. It becomes documented. For years, drivers assumed these devices were mainly for engineers and crash reconstruction. Now, they are part of the accountability system. They show exactly how you were driving, and they cut the gray area out of fault disputes. For anyone who has never checked whether their EDR is functioning, this rule creates a hidden risk. You won't find out there's a problem until an inspection, a crash claim, or a roadside check brings it to light. At that point, the fine arrives with it. This is where a lot of drivers realize that modern cars aren't just transportation anymore. They're evidence machines. The second rule is the one officials expect to generate the largest number of violations in the shortest amount of time: nationwide real-time insurance verification. In February 2026, this system goes fully live and completely changes how coverage is enforced. That plastic insurance card you hand over at a stop, functionally obsolete. A national verification database now links law enforcement systems, toll gantries, and automated plate readers. Every scan pings your insurance status in real time. If your policy is inactive, even for a single day, the system flags it. There's no warning built in. First offense, $1,000 fine. Second offense quotes out $500 and mandatory license suspension. The trap here is how common short lapses actually are. Missed payments, card expirations, small billing errors, switching carriers. These create gaps much more often than people think. Under the old model, those gaps often went unnoticed unless you got pulled over at exactly the wrong time. Now, the system is checking constantly. It doesn't care why the lapse happened. It only cares whether coverage exists that moment. Once the violation hits the record, clearing it is very difficult. This is where many drivers get caught, not because they chose to drive uninsured, but because they assumed a brief gap wouldn't matter. After February 2026, it matters immediately. If staying ahead of changes like this helps you avoid expensive surprises, make sure you're subscribed. The rules are shifting fast, and missing one detail can be costly. The third rule is the one safety advocates pushed hardest to accelerate, and it's also the one most drivers underestimate until it hits them: automated cell phone detection. In February 2026, this technology becomes fully enforceable. It doesn't operate the way people expect. These aren't just upgraded red light cameras. They are advanced systems positioned at major intersections and along busy stretches that analyze driver posture, hand position, device location, and screen glow inside moving vehicles. They can tell the difference between a phone sitting in a cup holder and a phone actively in use. They can detect the body position associated with texting, scrolling, or holding a device near your face. And they run continuously. No officer judgment involved. First violation, $500. Second, $1,000 plus a mandatory distracted driving course. Third, a 90-day license suspension. By the time the rollout is complete, more than 300 metro areas will have these systems running, with plans to expand further. What makes this rule hit so hard is how normalized phone use behind the wheel has become. Many drivers don't even think of quick glances as using their phone. Many assume they're only at risk if an officer happens to see them at exactly the wrong moment. That assumption no longer applies. These systems don't give verbal warnings. They generate official notices. And once a violation is recorded, fighting it is difficult. The evidence is photographic or video-based, time-stamped, and stored. For drivers who rely on habit instead of intention, this rule alone can generate multiple tickets in a short period. It's not about how careful you feel you're being. It's about whether your behavior triggers what the system is programmed to flag. The fourth rule rewrites something drivers have quietly relied on for decades: the idea that speed enforcement is about catching you at a single point in time. Starting in February 2026, average speed monitoring zones will be expanded across federal highways and major routes. Instead of clocking how fast you're going at one spot, cameras record your time of entry and time of exit over a stretch. Your average speed for the entire segment is calculated automatically. If that average exceeds the posted limit, you get a violation. Slowing down when you see a camera won't save you if you've been over the limit for miles. This rule targets drivers who run just a little fast for long periods, not only those who spike their speed briefly. Fines begin at $300 and can reach $800 when your average is more than 15 miles per hour over the limit. From an enforcement perspective, this is extremely efficient. It wipes out the old games. No more guessing where the officer is. No more timing a quick slowdown. The system doesn't care where you went fast or slow. It only cares about the math. And because the calculation happens after the fact, many people don't realize they've violated the rule until the notice arrives in the mail. For commuters who cover long distances every day, this quietly increases their exposure to repeated fines. A habit that once felt minor suddenly becomes expensive. This is where a lot of drivers begin to see that enforcement is no longer reactive. It's analytical. And when enforcement is analytical, consistency over time matters more than split-second behavior. The fifth rule locks the system together. You and it has the harshest long-term financial impact. Beginning in February 2026, emissions compliance isn't confined to scheduled tests or shop visits. New roadside emission sensors will operate passively, reading vehicles as they pass by. They can detect non-compliant exhaust in real time and compare it to federal standards. If your car fails, a violation is generated automatically and mailed within 72 hours. The initial fine is $400, but that's only the beginning. Once flagged, your car enters a compliance window. You have 30 days to complete repairs and verify compliance. Miss that deadline and daily penalties of $50 start stacking. They don't pause, they don't reset. After 90 days, your registration is automatically suspended. Your vehicle is no longer legal to drive, even if everything else, insurance, license, is fine. This rule hits hardest because many drivers won't know they're out of compliance until the letter shows up. Older cars, modified exhaust systems, deferred maintenance all increase the odds of getting flagged. Repairs to emission systems can easily run into the $2,000 range or more. What used to be an occasional headache now becomes a rolling financial threat. The longer you wait, the more expensive it becomes. This rule isn't designed to gently encourage you to fix problems. It's designed to force repairs quickly, using money as leverage. And this is where the impact becomes uneven. Not everyone can absorb this kind of pressure the same way. Analysts and consumer advocates have been blunt about who stands to get squeezed the hardest: lower income drivers, families with older cars, and people whose jobs depend on daily driving. A newer vehicle with up-to-date systems and stable insurance is far less likely to trigger multiple violations. An aging car with overdue maintenance is far more exposed. The same applies to insurance. Households living paycheck to paycheck are more likely to have short coverage gaps, not through neglect, but because money is tight. Under the old system, those gaps might have slid by unnoticed. Under the new one, they're immediately punished. What's especially worrying is how these penalties stack on top of each other. One violation often sets off a chain. An emissions failure leads to registration problems. A suspended registration leads to insurance complications. Higher premiums make coverage lapses more likely. This doesn't just punish non-compliance, it can trap drivers in a loop. That's why critics say these rules are more than safety reforms. They're a new way of enforcing driving privilege by using financial pressure as the main tool. For people already stretched thin, preparation isn't a nice idea. It's the line between staying on the road and being priced off it entirely. As these rules started feeding into state systems, the ripple effects were immediate. DMV offices reported spikes in calls and visits as drivers tried to figure out their status. In some places, wait times jumped by nearly half in just a few weeks. Insurance carriers, seeing what was ahead, began quietly adjusting risk scores and announcing premium hikes for anyone with recent moving violations. Over the last 3 years, auto shops in major cities have seen a noticeable increase in emissions and diagnostics appointments, many scheduled months in advance. None of that is random. It's what happens when enforcement, insurance, and compliance systems all move in sync. It signals more than routine regulation. It signals design. Federal officials didn't just tweak rules. They aligned every downstream consequence to reinforce them. For drivers, that means one violation rarely stays isolated. It touches your record, your premiums, your registration, your legal ability to drive. We haven't seen concerted pressure like this since the early days of seatbelt mandates, when fines and enforcement were used deliberately to force a behavioral shift. Back then, many people resisted until the cost made resistance too expensive. The pattern is reappearing, only this time the tools are more precise and far less forgiving. What this really marks is the end of a mindset many drivers took for granted: casual compliance, the belief that enforcement would be patchy, that some things would slide, that short lapses or small habits wouldn't matter much. After February 2026, that mindset becomes risky. Federal standards now smooth out state-to-state differences. Real-time checks replace occasional ones. Passive monitoring reinforces active policing. Penalties accumulate faster than before. The system no longer waits for a big error. It catches small ones repeatedly. And small errors, when captured automatically, add up quickly. A lot of people still think emissions only matter at the annual test. That insurance only matters if they're asked for a card. That technology can't really see what they're doing in the car. Every one of those beliefs is outdated. The era of casual compliance is ending, not because drivers got dramatically worse, but because enforcement became constant. And when enforcement is constant, preparation is the only real protection. That's not fear-mongering, it's simply recognizing where we are. Driving in the US is entering a new phase, one where accountability is baked into the road itself. Ignoring that shift is no longer affordable. The timing makes this especially hard. These rules are landing at a moment when many households are already under financial stress. Cars are expensive, repairs are costly, insurance premiums have climbed. For millions, a vehicle is not optional. It's how they get to work, care for family, and handle basic life tasks. When new regulations arrive in the middle of that pressure, they don't feel like safety upgrades. They feel like new threats to already thin budgets. A $400 fine isn't an abstract number. It's a week of groceries. A $1,000 insurance penalty isn't just a line item, it's a month's rent. When those fines stack, when daily penalties start accruing, stress levels spike fast. Transportation agencies can talk about safety and compliance all they want. Drivers experience this as cost. That disconnect matters. When people feel financially cornered, they're more likely to delay repairs, push insurance payments to the limit, or hope issues go unnoticed. Under the old setup, that sometimes worked. Under the new one, it doesn't. The system isn't built to factor in hardship, it's built to detect non-compliance, no matter the reason. That's why consumer advocates are raising flags now, not after February 2026 is in the rearview mirror. They know prevention is far cheaper than penalties, and that awareness is the only real cushion drivers have left. Strip away the formal phrasing from recent federal guidance, and the message is blunt. Compliance is no longer optional, and patience is short. Officials have said plainly that ignoring these rules is incompatible with responsible vehicle ownership. In bureaucratic speech, that's as close to this is your warning as you're going to hear. Historically, that tone only appears when agencies trust their tools and are ready for complaints, and they are. Enforcement money is allocated, tech contracts are signed, databases are online. This isn't a test, it's a posture shift. Billions of dollars in fine revenue are now written into traffic codes nationwide. That money doesn't come from companies. It comes from drivers. That's what makes this moment different. It's not just about following the law, it's about understanding how hard the law will now be pushed. For years, people assumed enforcement would stay fragmented, uneven, and deeply human. February 2026 is when that assumption stops being true. The system is coordinated, it's automated, and it's running all the time. The only real choice left to drivers is whether to enter that phase prepared or to learn the hard way through violation notices that show up without warning and don't go away on their own. In response, consumer groups and transportation lawyers have been unusually straightforward. They've warned that these 5 rules are calibrated to catch people who wait, not just reckless drivers, but busy, stressed, distracted drivers who tell themselves they'll deal with it later. Later is when the penalties multiply. A missed repair deadline turns into daily fines. A suspended registration creates insurance headaches. An insurance lapse leads to a loss of license. Each step removes options and raises the stakes. What's revealing is how many professionals are urging people to act before February 2026, not after. They understand that once enforcement is fully active, systems won't slow down for anyone's learning curve. Grace periods will be short, appeals will be uphill, and most tickets will be backed by digital records. Attorneys watching early implementation note that enforcement arms are fully staffed, fully funded, and under pressure to show results. Rolling out all 5 rules at once was no accident. It was intentional. When multiple requirements change at the same time, it overwhelms complacency. It forces quick behavior change. That's the logic behind aggressive compliance drives. It's exactly what's happening here. Drivers who recognize that strategy have a built-in advantage. They can prepare calmly. Drivers who don't often end up feeling blindsided. The hard truth is that people are not powerless in this, but the window to act is narrowing. Getting ready now looks very different from reacting later. It means confirming that your insurance has no gaps. It means checking that your car's event data recorder and emission systems are functioning before a violation exposes them. It means learning how average speed zones and phone detection systems actually operate instead of assuming the old tricks still work. None of those steps are dramatic, but they are protective. They move you from reactive to informed. Informed drivers don't feed enforcement systems with revenue. Unprepared drivers do. That's why this moment matters. February 2026 is not just a date, it's a dividing line. On one side are drivers who adjust early and absorb minimal cost. On the other are those who keep driving like nothing has changed until the envelopes arrive. What happens next depends almost entirely on awareness. Federal officials are watching compliance rates. Insurers are watching claims and violations. Families are watching their bank accounts right now. Small decisions determine whether driving stays manageable in the months ahead. Because once enforcement fully kicks in, the system won't ask if you knew. It will only check if you complied. What we're seeing now isn't the end of the story, but the opening of a much tighter enforcement era. Transportation officials have already signaled that February 2026 is phase 1. As data comes back, priorities will be adjusted, expanded, and refined. Systems that start in big cities will spread outward. Thresholds that start modest can be lowered, penalties that feel steep now can go higher later. That's how modern regulation works. It doesn't arrive and freeze, it arrives, watches behavior, and then adapts. That's why officials are so focused on how drivers respond. They want to see whether information alone drives compliance or whether fines become the main teacher. For drivers, that difference is everything. A system that sees strong early compliance tends to stabilize. One that sees mass non-compliance tends to tighten the screws. The 30 days before full activation are not just about avoiding fines. They're about influencing what enforcement looks like going forward. Households that get ahead of this ease pressure on the system, households that don't increase it. When pressure goes up, so do costs. That's why February 2026 should be seen as a turning point, not a routine update. It marks the moment when driving in America becomes inseparable from constant verification. Technology enables accountability. Accountability enables enforcement. And automated enforcement creates financial consequences quickly and consistently. Drivers who take the time now to verify they're in compliance are likely to remember this as a close call they navigated. Those who shrug it off may remember it as the month driving suddenly got a lot more expensive. The difference isn't luck, it's awareness. The rules are already written, the systems are already running, the penalties are already set. What's still undecided is how ready drivers will be when enforcement speed increases. Because once February 2026 hits, there'll be no doubt about what changed. Only the question of whether you adapted in time or whether your first introduction to these rules comes in the form of a fine. Preparation is what separates those who stay in control from those who pay. And right now, preparation is still an option.